The S&Ps are down another 7.3% after the last Fed meeting just 7 trading days ago. It's pretty clear that the Fed spooked the market, but is help on the way? Welcome to the ReadySetTrade Market Minute for Sunday, the 2nd of October. Let's start out looking at the fractal pane charts here. We have the monthly, weekly, and daily charts left to right. And like I put in Thursday's Market Minute, the technical picture right now is about as bad as it could possibly be. Everything is pointing to the downside, and the next stop down is probably somewhere here about 3,400 before we get some kind of relief bounce. Now, that's the technical picture until something changed. We do have a lot of energy available for this plunge to the downside. All it's waiting for is for the daily chart to recharge a little bit, and that may happen by Monday or Tuesday. Now, here's the wild card. The Fed caused this because of their misread on transitory inflation last year. Then all of a sudden, they decided to get with the program this year. They're way too late, as they always are, and they're being super stubborn about fighting inflation by just jamming on the rate hikes. And the messaging, we just got through with a week of 17 different Fed speakers over the last week, all parroting the same noise, all parroting a very hawkish approach to fighting inflation. And frankly, it's spooking the market. And like I said, we're down 7.3% since the last Fed meeting. What's happening on Monday is that we have a special meeting of the Fed. I think the Fed has finally gotten the message that the market is not responding to what's going on, as well as there's going to be 100 pounds per square inch of political pressure in about 3 to 4 weeks if the market is crashing into the midterms. You don't think somebody's going to tap Powell on the shoulder and say, could you modify your message, please? So here's what I think. If the Fed does come out of their meeting on Monday and says, we were just kidding about hiking the rates going forward, we're going to think about slowing down the pace of rate hikes, even if there's any kind of conciliatory pivot on Monday. I believe this will probably push markets up to another lower high. It may only get as far as 38 to 3,900. I don't see this as being very, having a very good chance of being able to break out. I think we are going to be looking at the next leg down as we get later on in October. However, this is going to be a temporary reprieve for those that are trapped at the downside. And this is going to offer an excellent shorting opportunity for those that missed on this swing. So watch what happens on Monday, and you'll get your initial read on Sunday night with the pre-market futures. That's it for today's Market Minute. Thanks for listening. See you in the next one.